$30,000 to $200,000. According to GoodRx.com, that is the average price range for an open heart surgery. Now, if you have found this video today and you're watching this, you're interested in some sort of way to learn about Medicare and Medicare products. Maybe you're turning 65, maybe you've had Medicare and you're looking to figure out some more information about other products. Whatever it is, you've found a video because you're interested in learning something. I want to start by sharing the stat, $30,000 to $200,000. That is the average price, according to GoodRx.com, for an open heart surgery. Hi, Jackson Taylor here with Brock Partners. Thank you so much for tuning into this video. We're going to talk about some useful information for you today, especially if you're turning 65 and entering into this confusing Medicare journey. That's why we named this page Your 65 Compass, because we're here to guide you through that. Hope you find this information very valuable. Now, if you are on Medicare, right, we're talking about Medicare, maybe you're turning 65, you're going to Medicare for the first time, maybe you had Medicare for quite some time, but if all you have is original Medicare, what we call OG Medicare, original Medicare, what we're seeing is you would be responsible on the medical side for 20% of this, 20%. Now, I don't have to go and do the math for you on that. We look at 30,000 here, and 20% of 30,000 is going to be a $6,000 bill that you would be responsible for after Medicare pays its portion. And goodness, if we do the 200,000 here, the $200,000 mark, and we did 20% of that, that's a huge amount, right? We're talking lots of money that you could be responsible for out of your own pocket. And you're getting all this mail and you're seeing all these commercials about Medicare, Medicare Advantage, original Medicare A and B. You're seeing all this information. You're getting mailed to your home, and you're not really seeing companies or mailers consider these real life numbers. Well, there's a couple ways that we can help our customers, help our clients, help Medicare beneficiaries like you avoid some of these catastrophic amounts of money towards medical services. We have a couple different ways to do that. And in this video, I want to focus on something called Medicare supplements. I want to focus on Medicare supplements. And if you've done your research, you have likely looked into the type of products that I'm going to discuss in this video, Medicare supplements. There's some other names for it that you may have heard or maybe you've seen. We have some agents and customers and beneficiaries refer to these as med sups. That's another name that you may see someone use when talking about these products. You may have also seen the term Medigap in your research, in the information that you've received, in the phone calls that you've seen, the TV commercials that you're seeing. You may have seen these terms right here: Medicare supplements, med sups, Medigap. Those are all synonyms. They all mean the same thing. They are ultimately Medicare supplements. And that's what we're going to talk about. That's what we're going to talk about. And in your research, you may have already decided that you want to go a Medicare supplement route. Maybe you're on the fence. You're trying to decide if you want to go this direction. I want to start by saying this. If you go the Medicare supplement route, what you've ultimately decided is that original Medicare is the option for you. Now, we have two primary coverages with Medicare that we can elect to be enrolled into. And the first one is original Medicare. That's parts A and B of Medicare. I can enroll into Medicare, and that would be my primary coverage. That's what we're going to focus on in this video. The other option is Medicare Advantage. Maybe that's not the direction you want to go. Maybe it is. It really just depends. Now, with Medicare Advantage, we have things like prior authorizations. We have networks that we have to maybe deal with that we wouldn't deal with as much on the original Medicare side. And maybe that's you. Maybe I'm talking about you. Maybe you do not want to deal with the Medicare Advantage side. You don't want to deal with the networks and the managed care. And if that's the case, then original Medicare is the option for you. And you may have already made that decision as well. We don't advise beneficiaries and we don't advise people to really be on original Medicare by itself, mainly because of that 20%. The way these plans work, these Medicare supplement plans work, is in the name, Medicare supplements. Medicare supplements. It supplements your original Medicare. That's how it works. It will not work with Medicare Advantage. It won't work with any other kind of health insurance. These supplement original Medicare. These are products that supplement original Medicare. And we're going to take a look at the three most popular Medicare supplement plans in the U.S. and maybe have a little information that dives into some other options as well. But we're going to take a look at Medicare supplements and we're going to talk about the pros and the cons of these products and what they look like. Really, you need to understand Medicare, original Medicare. You need to understand Medicare. You have to have a grasp or a little bit of understanding of how it works to really fully understand how a Medicare supplement would work for you. And so with original Medicare, what we're most concerned with, when we take a look at original Medicare, what we're most concerned with are different gaps that we could have out of pocket. First things first, we have Part A, which is our hospital coverage. This is hospital. Anytime I stay the night at this facility, maybe a hospital or a skilled nursing facility, Part A is what's going to foot the bill. That's what's going to foot the bill. So if I stay the night somewhere, room and board is kind of a good way to look at it. With Part A, I do have some out-of-pocket costs that can add up. I have a deductible, I have co-pays, I have lots of things I can end up paying for. And ultimately, with Part A on hospital, I could end up, if I'm in the hospital long enough, I could end up with 100% co-insurance, which means that you, as the beneficiary, could end up being responsible for 100% of a hospital stay if you were to stay in the hospital for a very lengthy time. So deductibles, co-pays, 100% co-insurance ultimately is something you could run into. And these numbers are pretty big numbers. I mean, we're talking about a deductible that's over $1,600. And this is not yearly like most deductibles. This is every benefit period. Every benefit period, this deductible starts over. So you can see right away, if you're on original Medicare only, just on the first Part A here, we've got some out-of-pocket costs that you can run into. Well, I have another part here. That's original Medicare. That's Part B, which is medical. This is any time I see a doctor or I have a service that I have completed or I have some kind of claim on a medical, maybe I go see a therapist or I go see my primary physician or I see a specialist. This is what's going to foot that bill. I have an outpatient surgery, something along those lines. That's going to fall under Part B, my medical coverage. Now, Part B is the one that we actually are most concerned with when it comes to out-of-pocket cost on your gaps in coverage, because this can add up very quickly. Reason being is I do have a deductible. That deductible is very small, very small. It's typically, depending on what year we're in, it's going to be under $300. Right now it's $287 for the year 2026 is what it is. And that is annually. That is annual. Right? So I have a low deductible here that I pay one time a year. After that, this plan, Part B, becomes an 80-20 co-insurance. 80-20 co-insurance. What does that mean? Well, that means that I have to pay 20% of my medical bills. This refers back to the number that I was bringing up at the beginning of our video here. If I were to have some kind of major surgery that was outpatient, right? Now, of course, a heart surgery is not going to be outpatient, but in a worst case scenario, let's say I had a surgery and it was a $50,000 procedure that was outpatient and it had to be covered by my Part B. I have to pay 20% of that bill, which is going to be $10,000 that you could be responsible for after Medicare pays its share. That can be pretty hefty, and for most people, that can be a hard hit, $10,000, especially once you reach retirement. What is most concerning, even past this 80-20, is that there's no what we call MOOP. Now, the term MOOP, all that means is maximum out of pocket, maximum out of pocket. Most insurances or policies that you have a maximum out of pocket. They have a cap or a stop loss that says this is the most that you would spend out of pocket in any kind of situation within a year. Maybe it's a $5,000 to $7,000 max out of pocket. If I have a $5,000 maximum out of pocket, it means $5,000 out of my own pocket is worst case scenario. Once I hit that, the carrier, the insurance, would then foot the bill 100% for the rest of the year. Medicare does not have a max out of pocket on either Part A or Part B. So if I have a couple procedures in a year, all of a sudden this can start to add up. And if we're talking about skilled nursing stays or hospital stays, it can be detrimental. It can be catastrophic. You can have a lot of out-of-pocket expenses, and they can add up because there is no maximum out-of-pocket. That is why these policies, these Medicare supplements that I'm going to focus on the next few moments, that is why they exist. These exist as secondary plans. They're private plans that exist to fill in the gaps of these out-of-pocket expenses that I'm talking about right now. And we have a whole slew of them. We have a whole slew of options of these Medicare supplements. There's lots and lots of them. You've already learned about it, Part A, B, C, D of Medicare, and now I've got plans A, B, F, J, K, X, Y, Z. I've got all these different letter plans that I can have options with. I'm really only going to focus on 3 of them for the next few moments in the rest of this video. And that is going to be Plan F, and I'm actually going to write it this way. I'm going to put the word plan in front of it to save confusion. Plan F, Plan G, and then Plan N. Those are my 3 options that I have. Plan F, Plan G, and Plan N. Again, that's F, G, and N. These are going to be secondary policies that fill in. These are going to be secondary policies that fill in and cover the gaps that I have associated with my Medicare coverage. Plan F is the one I'm going to start with. It's the supplemental plan that is the easiest to explain. The way this works is Plan F is going to cover 100% of the beneficiary's Part A and B, Part A and B expenses. So Medicare Supplement Plan F is going to cover 100% of the Part A and B expenses that the beneficiary would be responsible for. Let me say it this way. If you were to have some kind of medical service performed, Medicare would pay its share, and then Medicare Supplement Plan F would pay your share. That's how Plan F works. Pretty simple and straightforward on Part A and B expenses. Of course, there's other types of things you need to consider, like drug coverage or dental, vision, hearing, because Medicare doesn't cover those things. It doesn't cover drug medicines at the pharmacy that you can pick up. It doesn't cover dental, vision, and hearing. And so Medicare doesn't cover that. Your Plan F wouldn't cover that. Your Medicare supplement plans are only going to cover what Medicare covers. If Medicare pays for a service, then your supplement would pay as well. If Medicare doesn't pay for a service, your supplement will not pay for that. It only works with original Medicare, and it only works when original Medicare takes action and pays for a service or a claim. So 100% of your Part A and B expenses. That same heart surgery that we talked about earlier, well, if you had a Medicare Supplement Plan F, between Medicare and your Plan F, you wouldn't pay anything for that heart surgery out of your own pocket. Now, you would pay a premium for the plan, and we'll get into that topic in just a minute, but as far as claim services, the bills that come through, you wouldn't pay a dime on any of your Part A or Part B expenses, hospital or medical expenses, which is really great to have. Now, something you need to understand about Plan F is that if you have a Medicare effective date of January 1st of 2020 or after, you can no longer enroll into a Medicare Supplement Plan F. You can't purchase a Medicare Supplement Plan F. Beneficiaries who can enroll into a Medicare Supplement Plan F have to have an effective date prior to January 1st of 2020. Now, if either one of your Medicare Supplement Plan if either one of your Medicare effective dates, Part A or Part B, are effective before January 1st of 2020, then yes, you can purchase the Plan F and be enrolled into a Plan F. If it's on or after, you can not get the Medicare Supplement Plan F. Now, no need to worry about that because we do have two other options. And matter of fact, that takes me to our second option. Our second option here is the Plan G. And the Plan G is actually the most popular Medicare supplement plan in the U.S. This Plan G is. And the way it works is very similar. It's very similar. It's going to cover 100%, get my marker back out. It's going to cover 100% of my Part A expenses. And then on Part B, it'll cover everything except for my Part B deductible that we kind of mentioned earlier. So with the Plan G, you would be responsible for your Part B deductible. After that, it's going to cover everything. So kind of like what we talked about with the Plan F here, everything's covered under Plan F. Plan G is pretty similar in the experience that you're going to have. Your Part A expenses are completely covered, meaning that if you stayed in the hospital, you wouldn't pay anything out of pocket between your Medicare and your supplement Plan G. Now, with the Plan G, what is different is that you would be responsible for that Part B deductible, that medical deductible, that is annual. After that, after you pay that Part B deductible, all your medical expenses would be covered 100% as well. In other words, you would pay your premium for the Medicare supplement plan, and then after that, you would pay the Part B deductible in a worst case scenario in a year, and then you wouldn't pay anything else when it comes to hospital or medical related situations. And again, I mentioned this earlier, dental, vision, and hearing, and I also talked about drug coverage, getting your medicines at the pharmacy. It goes without saying that any of these supplements we talk about, it's not going to work for any of that. These are going to cover your Part A and your Part B expenses. That's what it's going to cover, which can end up saving you thousands of dollars. And this one's extremely easy to understand, and the Plan G is the most popular Medicare supplement plan in the U.S. And it's a great option to look at. You pay your Part B deductible, and then after that, Plan G is going to pick up your share. Medicare pays its share, Plan G would pay your share. Which brings me to our Plan N, the third option that we're going to talk about, our Plan N. This one's going to have the most skin in the game. This plan's going to require you to have the most skin in the game if you were to get this plan. And we'll talk about why someone would maybe choose this over the other two as we continue to dive into this deeper and deeper and deeper. But with the Plan N, again, you may have guessed it, 100% of my Part A expenses are covered. Meaning that on Plan N, if I go to the hospital, I don't have to worry about any of my hospital bills. When it comes to room and board, anything done in the hospital, I don't have to worry about that. Medicare will pay its share. My Plan N would pay its share. And that's the same with F, G, and N. Hospital expenses completely covered. I can be responsible for some out-of-pocket cost on Part B. So let's talk about what that is. I do have to pay my Part B deductible. That does change. It will change. It's gone up every year since I've been in the industry, so that will change. But for this year, that's where it's at. That's what you'd pay, and that is annual. That is annual. Only have to pay that once a year. After that, I could have what we call Part B copays. On the Plan G, after I pay my deductible, I'm done paying medical expenses. With the Plan N, I would pay that Part B deductible, and then I could be responsible for something called Part B copays. And the way those Part B copays work is pretty simple. If I go see any kind of doctor at all, primary doctor, specialist, therapist, doesn't matter, I could pay up to a $20 copay, right? So I'm going to put out here $20 for doctors, right? I could pay up to $20. I may not pay that full $20. It's important you understand I say you can pay up to $20, but I can pay up to $20 for a doctor's visit. And then I could also have up to a $50 copay for ER visits. So if I were to go to the ER, if I had to go to the emergency room, I could pay up to $50 for the emergency room visit. Cool little fact here, if I were to go to the ER and then I was admitted into the hospital, that $50 copay is waived. And the reason for that is because I now am falling under Part A expenses because I was admitted into the hospital. And it's going to be covered by that by that plan in entirely. So $20, up to $20 for a doctor visit, up to $50 for an ER visit. Which takes me to my third, and this is the most different, the biggest difference, rather, between these supplemental plans, excess charges. On Plan F and G, excess charges are covered. I don't have to worry about that as the beneficiary. If I purchase a Plan F or a G, I don't have to pay the excess charges out of my own pocket. With Plan N, you are responsible, as the beneficiary, you are responsible for the cost of excess charges. Now, an excess charge is just an amount that I could pay over, or what a doctor can charge over for a service. You know, if Medicare says a service is worth $100 and they're going to bill it at $100, a doctor can charge 15% over that 100, over that claim, what they say it's worth. So a doctor can charge $15 in that situation. That excess 15% is what we call excess charges. And with Plan N, as the beneficiary, you would be responsible for that. And technically, there's no cap on an excess charge. You know, if the service is $100,000 and they charge it, well, you can do the math. If it's $100, you can do the math there. It can be up to 15%. The good news is that less than 4% of doctors in the U.S. participate in excess charges, less than 4%. And most of the time, they're doctors like chiropractors or maybe a dermatologist, something like that. So they do exist, but in our area that I live in, we know of one doctor that participates in excess charges, and it is a dermatologist. Outside of that, we don't have any doctors that participate in it. So it's very uncommon to see any kind of excess charge come your way, though you are technically responsible for that on a Plan N. So you may be thinking to yourself, okay, well, why would I go with the Plan N over the Plan G or the Plan F? Why would I go with each one? Why wouldn't I just go to the Plan F if I could get it, or the Plan G? Well, there are premium differences in these plans. Obviously, these plans are extremely convenient. I mean, these three options, F, G, and N, they are all fantastic. If I could switch my insurance to this today, I would in a heartbeat. They are phenomenal, convenient, secondary plans that go with your primary Medicare coverage, and they can do wonders for you, and they will take great care of you, and you would be very, very pleased with your experience with it. Very great options. Now, what you do need to understand is that they do have an additional premium. You know, as a beneficiary, I'm already paying for Medicare, the premium for it, and then I would have to pay a premium for these plans as well. I'm going to start with Plan F here, and I'm just giving you, and this is by no means, this is not a set in stone quote or a number for you. I'm just giving you an idea of what these can cost, and I'm going to do these for 65-year-olds. I'm going to do a 65-year-old male and a 65-year-old female. And this is really based in our area where I'm at here in North Mississippi. So keep that in mind as I give you these numbers. These can change. These numbers can change based off of your gender and your age and your area. I'm doing male and female 65-year-old in North Mississippi. And what I'm looking at is for a Plan F, for a male in my area that's turning 65, we're seeing that a Plan F would cost somewhere around $150 a month. That's what we're seeing. For a female in this area, we're seeing that number be something like $138, somewhere in that neighborhood. That's what we're seeing for a Plan F in our area. Now, to be very clear, many people who have retirement plans that are Medicare supplements or function like a Medicare supplement, they get a Plan F or maybe they get a Plan G, and they're going to end up paying $220 to $250 for a supplemental plan that they can get through a different carrier at this price. And we'll dive into that in just a moment. But I'm looking at $150 to $138 a month in premium is what I'm looking at. Now, if there is a con to these plans, it would be this, something called premium increases. These Medicare supplement plans, the premium can go up each year. Matter of fact, I'd go as far as to say they will go up in most cases. And what we're seeing is that with the Plan F, based on our book of business, based on our customer base, what we're seeing is that the Plan F increases somewhere between 9 to 14% a year, meaning that we're seeing our customers experience an increase of around 9 to 14% on the Plan F each year, going up that much. So if you're 150 and then you have a 10% increase, next year it's going to be 165. And so that's something to keep in mind there. Next, I have what I call a Plan G, right? We talked about the Plan G. I got male and I got female here. What I'm seeing is that for a male, we're looking at around $130, and a female, we're seeing something like $115. Somewhere in that neighborhood is what we're seeing. So I have a little more skin in the game. I have to worry about paying my Part B deductible with the Plan G, but the premium is going to go down some. It's going to be lower. You can see there's about a $20 difference, and then I got about a $23 difference based on the numbers I'm putting up here. And the premium increases are going to be lower too. What I'm seeing with premium increases is that we're going to see an increase of around 7 to 12%. So it starts at a little lower premium, and then of course the increase on it can be lower from a percentage standpoint. It can be slower, lower, so it can be more cost effective, even with that deductible out of pocket. The biggest premium difference we're going to see is between the G, the FG, and the N here. The N is by far going to be our lowest premium, with a male being somewhere around $98 a month, and a female being somewhere around $85 a month. And I am giving you our lowest numbers that we're seeing in our area, lowest numbers. So you can see that's a big gap there in premium. Plan N can be much lower, can be much lower. And the premium increases that we're seeing is somewhere between 1 to 5%. That's what we're seeing on that Plan N based on our book of business. So you can see here, I have the most skin in the game with the Plan N, but the premium is way lower, and my increases can be a lot slower too, a lot lower too. Something to consider when you're looking at these plans. Now, a question I get a lot of times is, Jackson, when I'm choosing a carrier, I'm choosing which insurance, how do I know that the Plan F is going to work with this carrier or this carrier? The good news is that these Medicare supplement plans are going to function the same no matter what carrier you go with. So they will function the same no matter what carrier you go with. A Plan F is a Plan F, a Plan G is a Plan G, a Plan N is a Plan N. It doesn't matter if you go with company A, B, C, X, Y, Z. Does not matter. The function is going to be the same. What can be different is the premium that they charge, and then also the underwriting that you may have to go through if you were to get on this outside of your open enrollment period. Carriers can decide how much they're going to charge, and they can decide what risks they're going to take on. What's good news for you if you're turning 65 is that you have a 12-month window. You have a 12-month window that we call your Medicare Supplement Open Enrollment, that you can enroll into one of these Medicare Supplement plans with no health questions asked, meaning you can get in there and the carrier has to approve you. They have to take you on because you were turning 65, and you get that option when you turn 65. Now, it is only a 12-month window, so it's important that you talk to an agent that can get this stuff done in a timely fashion, that knows what they're talking about, so that you can get enrolled into your Medicare supplement plan and not have to worry about underwriting, especially if you have chronic conditions. Once you get outside of that open enrollment period, you most likely have to go through some kind of underwriting where you would have to pass a health assessment that the carriers would ask you a series of questions about your health and get information about your medication. And if you have chronic conditions, that can be very detrimental to you. And it can be very hard to get onto a plan or purchase one of these plans if your health is not in great order. So it's very important to talk to an agent and get with an agent that knows exactly the information that they need to know, and they can get this done in a timely fashion. Now, to be very clear, there'll be other videos that you see and things that you hear about with high deductible plans and substandard plans that we can talk about all day long. But in this video, I really want to go over F, G, and N, your three most popular plans, F, G, and N, right there. I want to go over your most popular options, and these are the ones that you're going to see carriers offer, and these are the plans that are going to make the most sense for you. It's very important that you talk to an agent about your options. Of course, you can always find us. You can get in touch with us at our office phone number, whatever led you here, you can get with us. You can talk to one of our agents. You can go to our phone number, email, whatever it is you want to communicate with us. We would love to talk to you about these options right here so that you can get a plan that's going to take care of you and cover those gaps. But there you have it. That's your Plan F, your Plan G, and your Plan N. Thank you for tuning in. Have a great day and good luck on your Medicare adventure. Thank you so much for joining and tuning in for that video. I hope that you found the information very valuable. We have agents that would love to help you in your Medicare journey. If you want to figure out more about contacting us so that you can sign up for one of these options or look into one of these options, you can follow the descriptions in the YouTube link here. Please like and share this video with somebody you know that maybe is looking for help. But ultimately, if you want some help from us, contact us, reach out to us. We'd love to talk to you. We have agents ready right now.
Did you say you can find it in the description?
I didn't. Let's just do that one again.
All right.
You ready?
Yep.
Thank you so much for tuning into that video. I hope that it was helpful for you. I hope that we can assist you in your Medicare journey. If you would like to reach out to Brock Partners in order to receive help or maybe guidance on your Medicare journey, you can find contact information in the YouTube description, the video description right under this video. You can find a phone number and email to contact us, and an agent would love to assist you. Please like, comment, subscribe, whatever you got to do to this video to get it out there. Share it with a friend who's looking for some help. We would be greatly appreciative of that. Have a great day. Thank you so much.